All right, let's jump right in. We're diving deep into the world of Forex, specifically Chapter 1 of the Fundamental Analyst's Handbook.
Ah, yes, the groundwork.
It's laying the foundation for understanding how this whole currency trading thing really works, but in a way that I think will be really fun for our listeners.
I hope so.
Because we're not just talking charts and graphs here, right?
Right.
It's real-world economics, power moves of central banks, and maybe even how to spot the next rising economic star country.
Absolutely. All about understanding the forces behind the numbers.
Exactly. So if you're ready to unlock the secrets of currency movements, well, let's go.
I think a good place to start is with this idea that real-world events, they actually have a huge impact on currency values.
Yeah, it's kind of mind-blowing when you think about it. It's like a chain reaction.
Yeah.
You know, you have supply chain disruption in one country, it can weaken their currency.
And then bam.
It ripples through the whole global market.
It really highlights how connected everything is.
It is.
It's like picturing this massive global bazaar. Ah, I like that.
Where countries are constantly buying and selling from each other.
Right.
And the prices they're willing to pay are reflected in their currency's value.
Exactly. It's supply and demand on a global scale.
But it's not just individuals haggling in this.
Right. No. Much bigger players.
Right. We're talking central banks, governments.
Huge commercial banks.
Institutions.
Their decisions, they can send shockwaves through the entire market.
Oh, yeah. So speaking of those big players, what tools are they using in this global financial game?
Well, that's where we start getting into the different types of Forex markets.
Okay, Chapter 1 mentions that. Can you break those down for us a little bit?
Sure. Let's stick with that bazaar analogy. Imagine you're there and you want to buy something.
Okay, I'm there. Got my basket.
You have two options. You can buy it right now at the current price, which is like trading in the spot market.
Instant gratification.
Or you can agree to buy it at a specific price in the future, sort of like pre-ordering. That's similar to the forward market, where you lock in a price for a future exchange.
So spot market for today, forward market for planning ahead.
Exactly.
Got it. But Chapter 1 also mentions these things called instruments, like major currency pairs, exotic currencies, even something called derivatives.
A bit more complex.
What are those all about?
Think of those as the different products being traded in our Forex bazaar.
Okay.
The most common are the major currency pairs.
Like we hear about on the news all the time.
Exactly. The euro versus the US dollar, for example.
Okay.
Then you have exotic currencies.
What makes them exotic?
They're less commonly traded pairs, often from emerging markets.
Okay. So the major pairs are like the popular souvenirs everyone wants.
Right.
And the exotic currencies are the more unique, harder to find items.
Precise.
All right, got it. But what about these derivatives? They sound a bit more, I don't know, intimidating.
They can be a bit more complex, yes.
Why would someone use them?
Think of them like specialized tools for traders. They let you do more than just buy or sell currencies directly. You can use them to manage risk.
Okay.
Or even speculate on future price movements.
Interesting. Can you give me an example?
Sure. Let's say you think the US dollar is going to weaken.
Okay.
You could use a derivative to potentially profit from that if your prediction comes true.
So derivatives are like, I don't know, advanced trading techniques.
You could say that.
Okay. But before we even get to using those, if I wanted to jump into this Forex bazaar, what would I actually need to start trading?
You'd need a trading platform. Think of it as choosing your storefront in our global bazaar.
So like, do I want a simple booth or a fancy high-tech storefront with all the bells and whistles?
It depends on your needs and your level of experience.
What are some of the key things I should be thinking about when making that choice?
Well, first and foremost, security and reliability.
Of course, yeah.
You want a platform that will keep your funds and your data safe.
Makes sense.
You'll also want to consider the types of orders you can place, whether it offers real-time data, charting tools, and of course, ease of use, especially if you're just starting out.
Yeah, user-friendliness is key for a newbie like me.
Absolutely.
So finding the right platform that fits my trading style and experience level.
Precisely.
Okay, that makes sense. We've talked about the markets, the players, the instruments, even how to get started.
The basics.
But what actually drives the prices of these currencies in the Forex market?
That's where fundamental analysis comes in. Now think of the Forex market as this grand, intricate symphony.
Oh, I like where this is going.
And each currency is a different instrument playing its part.
Okay.
Fundamental analysis is all about understanding what makes those instruments play the tunes they do.
I love that analogy. So what are some of the key instruments, so to speak, in this financial orchestra?
Well, you have things like GDP, which gross domestic product, represents a country's overall economic output.
Okay.
Inflation, the rate at which prices are rising.
Right.
Interest rates, set by those conductor-like central banks we talked about earlier. And even political stability can play a major role.
Oh, interesting. So things like a country's economic performance, their government policies, even political events can all impact the value of its currency.
Absolutely. It all feeds into the symphony.
It sounds like a pretty complex symphony to follow.
It can be, but that's where the skill of the analyst comes in.
Yeah, it's like learning to read the music.
Exactly. And that's what we're going to dive into next.
All right, I'm ready to learn to read the music of the markets.
Let's do it. You know, it's a bit like learning to conduct an orchestra.
Okay.
You need to understand how each instrument contributes to the overall sound.
Right.
And how those instruments are influenced by the conductor's direction.
So in the world of Forex, what are some of the instruments we should be paying attention to?
We touched on a few already.
Right.
GDP, inflation, interest rates.
Right.
These are all part of what we call macroeconomic indicators.
Macroeconomic indicators.
They give us a sense of a country's overall economic health and performance.
Okay, so macroeconomic indicators paint the big picture.
Exactly.
But Chapter 1 also mentions something called the balance of trade.
Yes.
And the current account. Are those also part of this macroeconomic picture?
They are. The balance of trade is essentially a measure of a country's exports versus its imports.
Okay.
So if a country is exporting more than it's importing, that's generally a positive sign.
Makes sense.
For their economy.
Right.
And it can strengthen its currency.
It's like a business.
Right? Exactly.
If you're selling more than you're buying, you're making a profit.
Right.
And that makes you more financially stable.
Precisely. But the current account is even broader.
Okay, how so?
It looks at all the financial transactions between a country and the rest of the world.
So it's not just about trade?
Not just trade.
No. What else is included?
Well, you have investments, remittances, even government transactions.
Okay.
Think of it like a country's financial report card. It shows how much money is flowing in and out.
So a healthy current account where more money is flowing in than out is a good sign for a country's currency.
Generally, yes.
What if a country has a current account deficit?
That can be a cause for concern.
Why is that?
Well, a current account deficit means more money is flowing out of the country than coming in. Which could suggest they're relying on borrowing to finance their spending.
So like living beyond your means.
Yeah, not the most sustainable strategy in the long run.
Right. And investors pay close attention to these factors.
They do.
Because they can influence the value of a country's currency.
Absolutely. A strong economy with a healthy balance of trade and current account.
It's going to be more attractive to investors.
Precisely.
Makes sense. This all ties back to those major players we talked about earlier.
Yes.
The central banks, governments, commercial banks. But who else is participating in the Forex market?
Well, you have hedge funds.
Hedge fund.
These are investment funds that use more advanced strategies, often involving a higher degree of risk.
Okay.
To try to generate returns for their investors.
So they're like the high rollers of the Forex market.
You could say that.
Constantly looking for ways to capitalize on market fluctuations.
Right. And then you have individual investors.
Like me.
Like the people who are trading currencies for personal gain or as part of their investment portfolio.
It's interesting to think that even individual traders can have an impact on the market.
They can. Especially when you consider the sheer volume of transactions happening every day.
So we've got the players in the market.
Right.
We've touched on the macroeconomic indicators, the balance of trade and current account. Now let's talk more about the how.
Oh, cool.
Different ways to actually trade in the Forex market.
We've already discussed spot and forward markets, but Chapter 1 also goes into more detail about those derivatives we mentioned earlier.
Right. Derivatives. Can you remind us what those are and why someone would choose to use them?
Sure. Derivatives are essentially financial contracts that get their value from an underlying asset.
Okay.
In this case, a currency.
Okay.
They can be used to manage risk or to speculate on future price movements.
Yeah. So instead of just buying or selling currencies directly, you can use derivatives to make more strategic bets.
Exactly.
Based on your predictions about where the market is heading.
Right. One common type of derivative is a forward contract.
Forward contracts.
It's an agreement to buy or sell a currency at a specific price on a future date.
So it's like pre-ordering something at a set price.
Exactly.
So you're protected if the price goes up in the future.
Right. It's like locking in today's exchange rate for a trip you're taking 6 months from now.
Okay, makes sense.
You're protected from any unexpected fluctuations.
What are some other types of derivatives used in Forex?
Well, you have futures contracts.
Futures contracts.
Which are similar to forwards, but they're standardized and traded on exchanges.
So are futures contracts more accessible than forward contracts?
They can be, yes, because they're more liquid and easier to buy and sell.
Got it. And then there are options.
Options give you the right, but not the obligation to buy or sell a currency at a specific price on or before a specific date.
So they offer more flexibility?
They do, but they can also be more complex.
To understand.
To understand and to manage.
So options are like having a reservation. You can choose to exercise it or not, depending on whether it's beneficial to you.
Exactly. And then you have swaps, which are agreements to exchange one currency for another at a specific rate on a future date. And then reverse the transaction at a later date.
Wow. It seems like there's a whole toolbox of derivatives available to Forex traders.
There is. And understanding the different types and how they work is an important step in developing a Forex trading strategy.
We've covered a lot of ground in this deep dive.
We have.
From the basics of the Forex market to the intricacies of derivatives.
And we're not done yet.
That's right. In the next part, we're going to delve even deeper into fundamental analysis.
Yes.
Learning how to read those economic indicators, like a pro.
We'll connect the dots between real-world events and currency movements,
giving you the insights you need to start navigating this exciting market. Okay, time to put on our analyst hats.
I'm ready.
We're going to really get into the nitty-gritty of fundamental analysis.
Let's do it.
We've talked about the Forex market being like this grand symphony with all these different instruments playing together.
Right, each one contributing to the sound.
Exactly.
Yeah.
But now we need to learn how to read the music, how to understand those economic indicators that are really driving those currency movements.
It's like going from enjoying the music to actually being able to identify each instrument.
Yes, and understanding how they all work together to create that whole sound.
Exactly.
Chapter 1 talks about those macroeconomic indicators being some of the key instruments.
Yeah.
Can you just give us a little crash course?
Sure.
What are they and why are they so important?
Think of them like vital signs for a country's economy. They give us a snapshot of its overall health and performance.
Okay.
One of the most important is gross domestic product, or GDP.
GDP, yeah.
It measures the total value of goods and services produced in a country.
So if a country's GDP is growing, that's generally a good sign, right?
Generally, yes. A growing GDP usually means their economy is expanding, which could make their currency more attractive to investors.
Right, because they see potential for growth.
Exactly. But it's not just about the absolute size of the GDP.
Okay. What else is important?
We also need to look at the growth rate.
Growth rate, okay.
Is the economy growing at a steady pace or is it slowing down?
So it's like checking someone's pulse. You want to see a healthy rhythm, not something erratic.
Precisely.
What are some other key macroeconomic indicators we should be paying attention to?
Inflation is a big one.
Inflation, yeah.
It measures the rate at which prices for goods and services are rising.
Right, right.
High inflation, that can erode the purchasing power of a currency, making it less attractive to hold.
So if a country's inflation is, out of control, their currency could weaken.
It could. People are less confident in its ability to hold its value.
Makes sense.
And that's why central banks often adjust interest rates, trying to control inflation.
It's all connected. High inflation could lead to central banks raising those interest rates. Does that have an impact on the Forex market?
Absolutely. Interest rates can have a big impact on currency values. For example, if a central bank raises interest rates, it can make its currency more attractive to foreign investors.
Okay, why that?
They're seeking higher returns, which could lead to an increase in demand and a rise in the currency's value.
So it's like a seesaw, kind of.
In a way, yeah.
When interest rates go up, demand for the currency might go up, and the value could follow.
Exactly. And then you have unemployment rates.
Unemployment, right.
High unemployment can signal a weak economy, putting downward pressure on a currency. Low unemployment, on the other hand, indicates a strong economy, which could boost the currency.
Okay, so we've got GDP, inflation, interest rates, unemployment. What other pieces of the puzzle are there when it comes to this fundamental analysis?
We also need to look at government budgets and debt levels.
Oh, right. Government finances.
A government running a large budget deficit or accumulating high levels of debt can raise concerns about their ability to manage their finances.
That makes sense.
Potentially leading to a weaker currency.
So a responsible government that keeps its finances in check is generally good news for its currency.
Precisely. Investors want to see stability and sound economic management. And those macroeconomic indicators, well, they can give them valuable insights into a country's economic health.
I'm starting to see the bigger picture, but I have to admit, it's a lot to keep track of. It's like becoming fluent in a whole new language.
It is a lot to take in, the language of economics.
Right. Chapter 1 mentions something called microeconomic factors as well. How do those differ from the macroeconomic indicators we've been discussing?
While macroeconomic indicators paint that broad picture of the economy, microeconomic factors zoom in on specific industries, companies, even consumer behavior within a country.
Okay, so things like industry-specific news, company earnings reports, consumer confidence surveys, that kind of thing.
Exactly. For example, if a particular industry is booming in one country, it could lead to increased demand for its products and services, boosting its economy, potentially strengthening its currency.
It's like those news shops in the global bazaar, right? If they're selling something unique and in high demand, it's going to attract more buyers.
And if consumer confidence is high in a country, people are more likely to spend money, which can stimulate economic growth and contribute to a stronger currency.
Okay, I'm really starting to get it now. Fundamental analysis is about understanding both the broad strokes of the economy and those finer details.
It's a holistic approach. You're considering the entire economic ecosystem, the interplay of macroeconomic indicators, microeconomic factors, even geopolitical events.
This deep dive into fundamental analysis has been truly eye-opening. Forex trading is about so much more than just charts and technical patterns.
It really is.
It's about understanding the forces that shape the global economy and how those forces impact the value of currencies.
It's a fascinating world, constantly evolving.
And the more you learn, the more you appreciate just how complex and interconnected it all is. We've covered a lot of ground in this deep dive.
We have, from the marketplace of the Forex market to the world of fundamental analysis.
The key players, the instruments, the platforms that make this market tick. We even started to unravel the threads of that economic data that weave the tapestry of currency movements.
This is just the beginning of your Forex journey. There's always more to learn, more to explore in this dynamic and exciting market.
Absolutely. Thank you so much for joining us on this deep dive into the fundamentals of Forex. We hope you learned a lot and have a newfound appreciation for currency trading. Until next time, keep exploring, keep learning,